Hi, this is Alessio Rastani of leadingtrader.com. I hope you're well. In this video, I want to give you an update about Bitcoin and also show you where I think that Bitcoin is likely heading next. Before I start though, I just want to give you some context because back on September 17th, this is what I said about Bitcoin in this video you'll see here on my Facebook page. So firstly, I said that Bitcoin had very likely completed an ABC correction. So the correction we saw in September, I said it was likely completed on this 100 simple moving average. And I said in that video that the most likely next move on Bitcoin was a move to test the previous highs at 5,000 to 5,200. Okay, so that was Bitcoin back then. So what about now? As you can see, we've already met our target at 5,000 to 5,200 here, and we're now above the previous highs, as a matter of fact. Now, one of the ways I like to analyze the market is using Elliott wave theory, which I find to be very powerful and effective. If you're not familiar with Elliott wave theory, this theory simply says that markets tend to move in a direction of major trend in 5 waves, followed by a correction. And as you can see in that chart. So let me just go back to the chart of Bitcoin. What I said at the time was I believe this was the beginning of the start of a new wave. So this would be our wave 1, wave 2, and this would be wave 3 still. Okay, and I think very soon we're likely to see a potential correction or a pullback. So we'd like to see a 3-wave correction. It would be our wave 4. Let me just put that on the chart. And the wave 4, once it's complete, should then be followed by another move up, and that would be our final wave 5. Now, I should just say, there are probably some folks watching this video right now, and they might say that Elliott wave theory does not work because it's subjective. Let me just say this. It is certainly true that Elliott wave theory has a subjective element to it, but that does not make it useless at all. In fact, I think it makes it more powerful. For one thing, what you should remember is a lot of analysis of the markets and charts is subjective anyway. And no two people can look at the same chart and have the same exact opinion. So that's true as well. I also believe that just because something is not objective or very objective, it does not make it useless. In fact, I think it makes it much more powerful. For one thing, you should remember that the more objective something is, the more likely it is that it's going to be manipulated by institutional traders and high-frequency traders. Okay, for example, let me just give you an idea. We know, for example, that this was the previous high on Bitcoin. That's a very objective fact. Well, guess what? Institutions, the big players in the market, know that, and so did the high-frequency traders. So what usually happens is that these institutional traders and high-frequency traders come and manipulate these levels deliberately to suck in traders, mostly retail traders, either to deliberately manipulate buyers or sellers in the market. That, of course, gives those institutions a major advantage. So let's not forget, the more objective something is, the more likely it's going to be dangerous in the sense that it's going to be manipulated by the institutions. So the fact that Elliott wave theory has a subjective element to it, in my opinion, is a good thing, a powerful thing. And you know what? I find it works the majority of the time as well. So as far as Elliott wave theory is concerned, I'm looking now at a potential pullback. Of course, it doesn't mean we need to get a pullback, but certainly what you need to remember are these support levels. Support level here, for example, at 5,000 to 4,900, and also the 21 moving average. Okay, these are the next levels you need to be paying attention to because it's likely we may get a pullback into those levels, and we can use that pullback as an opportunity to establish long positions. Let me just change the settings on this chart just for a moment. I'm going to change this to a 1 month and then change this to a 6-hour chart. Okay, now what you can see here is that firstly, we don't have a lot of divergence here on RSI or MACD. So despite the fact that we've made highs, we don't see a major bearish divergence, certainly either MACD or RSI. And a bearish divergence would tell us that there's potential weakness here. So we don't have that right now. As you can see here, we have a support here, 5,400. If for any reason we take out the support, and if we come down below 5,400, then watch out for these levels, which is going to be 5,200 to 5,000. Okay, that'll be at the 55 exponential moving average. That's purple line you see there, the 55 EMA. I always have these two moving averages on my chart, the 21 EMA and the 55 EMA, which by the way you can just put on your chart very simply. Almost all chart softwares have these moving averages. So those are the next two levels you want to be paying attention to. If you see move down into those levels followed by a bounce, you can use that as an opportunity to get long on Bitcoin. All right. But one thing we should also remember is that if this is a wave 3, which I believe it is, so if this is our wave 3, what we need to remember, the wave 3 corrections are usually very shallow. So pullbacks or corrections in a wave 3 tend to be not too deep at all, but quite shallow. And it's likely that we may actually get either some sideways movement here, so we might get some sideways movement in Bitcoin, or indeed another push higher to 6,000. All right. So the key levels to bear in mind here are the support levels at 5,400 and the next levels at 5,000 levels here. So again, a pullback into those levels can be used as an opportunity to establish long positions. And also, if we just go back to that daily chart again, I'm just go back to that daily chart there. And one thing just bear in mind here is that the previous high, which we just saw, was at 5,000 to 4,900. If for any reason we see a close below the previous highs of 4,900, which I don't expect and I don't think it's likely, then you're likely to see a lot more selling coming through, and that will push it down to the 55 EMA, which is likely to be at 4,500 by that time. But I'm not expecting that. I don't think it's quite likely. I think we're going to see more momentum, potentially higher, or some sideways consolidation. But in any case, one thing to watch out for is, now that we're in a wave 3, potential wave 3, look for any pullbacks to start wave 4 that could potentially complete at 5,000 to 5,200, followed by a wave 5 higher to 6,000, of course, higher than that. Alright guys, thank you very much for watching this video. If you like this video, then please remember to give it a thumbs up. And if you want to see more videos like this in the future, please remember to subscribe to our channel. You can also find me on my website, which is leadingtrader.com. Thanks very much.